Hello, guys, and good morning. Welcome to your market report for Monday, July 16th, 2018. We're going to get started right away. I got some really important things to show you in the charts about Bitcoin, about gold and silver, and the Dow Jones Industrial Average. So let's open the charts right here. Now, first thing I want to show you is I want to show you this chart right here. Now, this is a typical chart. It happens over and over again in every market. It is, you don't get past this. This happens. This is exactly what happens every single time in every single market. Always. This always happens. What happens is a market will go along for years, and you'll get a takeoff in price after you've made a third bottom or a fourth bottom in price. You make these bottoms, and then you get this takeoff at the start. Then you get what's called the first sell-off and bear trap, and then you get this media attention and enthusiasm in the marketplace. This is exactly what you see. Of course, this chart was written much longer time before Bitcoin and stuff, but this is exactly what you see in Bitcoin. But it's also what you see in gold and silver. It's also what you see in the stock market. It's what you see in every market behaves this way. This is how they behave. You get to the greed and enthusiasm and the delusionary point, and the delusionary point is where we were in the stock market in the Dow Jones about in the latter part of last year, toward the end of last year. And then we got to the new paradigm point toward the end of the year around Christmas time. Everybody thought we were in a new world. The stock market's going to go up to 50,000. They were quite literally saying 50,000 it's going to go to. We're in a new paradigm and everything. And then in January, when the thing fell off, everybody was in denial. Now look, see, where it says denial? That's what they were in. When the stock market was falling 1,000 points, they were all in denial. And then we had the return to normal. But now let's look at something real quick here. Let's go to the Dow Jones Industrial Average right now. Now this is today. We're up 14 points, by the way, on the day. But let's expand out and take a look at this chart. There's a couple things going on I want to point out of notice, big time of notice, that are really important about the Dow Jones today. Now that we looked at that chart, now remember that chart I just showed you. The first thing I want you to notice is that here was this market drop off, and right about that we had the dead cat bounce, similar to the charts show. Right about here, we should have had a fall in the market. We had our bounce. We should have had a fall, but this market, from here to here, this market is being controlled. This is a controlled market. So we're getting an extension out because of the control. They're doing everything they can to keep this market from falling. Somebody it's probably got an awful lot to do with corporate buybacks and tax rebates and everything else, right? But they've been able to extend this market out past what the normal would be. The normal would be a rather large fall off in this market. They've been able to extend this out, and they've been able to push off that fall off in the market out for a ways, right? But look what's happening right now. Right now, just in the past, I guess just starting in July. We've had a massive fall off in volume. Okay, can you see it right here, right down here at the bottom? With just in the past, and what's more, this massive fall off in volume corresponds to a rising stock market. So it started rising on June 27th. It started rising, right? And it's been rising ever since on this upswing right here. But on this upswing, you notice right here, from here to here, the massive fall off in volume. That's a nasty looking signal to me. That's a nasty looking signal to me. Anyway, let's take a look here, and let's take a look at the Bitcoin. Now, what are we going to look here at the Bitcoin today is we've had a little bit of an upswing, an uptick in price, but this is very much to be expected. Bitcoin is actually now, remember how I showed you that that market was manipulated and it wasn't following the standard chart. Here's the standard chart again right here. Okay? With its, okay, let me focus in on it again, take another quick look at it. Here's the standard chart, and the Dow Jones is not following this, because if we take a closer look at this again, we see after the new paradigm is reached, and the denial phase is reached, and they get that first initial fall off, and then they get the return to normal. You see what happens next is this fear and capitulation, and we get a rather large it's a crash. I won't call it anything else, but we should have had a crash. We didn't. The Dow Jones has been extended out here quite a ways into the future. It's been extended out with no crash. Well, Bitcoin is following this exactly. Now, take a look and remember what this looks like in your mind. Now, let's take a look at Bitcoin. Okay, let's expand the chart back out again, so you can see, and you'll see that Bitcoin is following this exactly. It's following this exact pattern. Just a second. Let me go back to like, what, the 12-hour? Okay, here's the 12-hour. Now you can see Bitcoin has followed this exactly. Here we were up at the new paradigm up here at $20,000. Everybody thought, oh my gosh, Bitcoin is going to go to 1 million. And they were even saying, oh, Bitcoin's going to go to 1 million. We're in a new paradigm for cryptocurrency and all this kind of stuff. And everybody was buying. People were buying at $20,000. And then we had this fall off here. And when we had this fall off, they were in disbelief. They just basically, it's going to return. It's going to come back. And we had to bounce. And it did bounce back. It bounced back to basically $17,000 it bounced back to. Right? But then we had that big crash. The big crash. It went all the way down to under $5,000. That's a big crash. That's a big percentage down. And what's happened now? Now we've been in the bottoming process where they have despair and everything else, you know, on the chart. Remember, take a quick look back at that dead cat bounce chart again. The despair. They're down in the despair and the return to mean part right now. And it's bouncing along in this despair part. That's where it is right now. And so this market, the cryptocurrency market, is behaving exactly the way a market's supposed to behave. It's not being manipulated so much. This was all exactly how it's supposed to go along. And it's following this, and it's going to return back. But everything's compressed in the Bitcoin. Now let me explain. Let's go to the silver chart for a minute and take a look at this. This is today's price on silver, 1576. Okay, and silver's hurting right now, but we're getting toward the end of the hurting, and let me explain to you why. Let's take a look at the silver chart out for a long time chart on the silver. And what do we see here? We see the exact thing is what it's supposed to do. It's supposed to go into the mania and went all the way up to $54.54, right? Silver. And everybody was in the new paradigm. Oh, it's going to go to 1,000. And they were buying at $54. It's the same thing all over again, except in silver. And you can see the way this chart looks. It's following exactly what it's supposed to do. Then we got the first initial drop off, dropped down to $29. And everybody was like, the same thing. It's what we're seeing that's repeated, that same pattern over and over again. And then we got the bounce back to 39, and everybody was like, you know, and then we've got these drop-offs, and we're down into despair now. When it went all the way down to $14.93 here, that's the despair. And then we're getting the bottom making process, right? And so what have we done? We've made a bottom right here at 2008. That was the first bottom in silver. Then we made a second bottom down here at 1493 or whatever. That was your second bottom made. Okay? And what are we doing right now? We're making the final third bottom at 15 1582 so far, but you're probably going to see it test this 1493. It's probably going to test that. So on this last bottom we're making right now, I think we're making the final bottom right now. I think we're putting in the final bottom, and I think we're probably going to test 1493. I think that's very probable. But this chart is behaving perfectly normal, and this is what a chart does before it gets ready to go back into a bull market again. Now, what do you think I mean by suppressed, compressed, I should say, compressed, with the Bitcoin is, if you take a look at this, how long did it take? Way back in 2011, we were at our peak, and look how many years, 2011, 2012, 13, 14, 15, 16, 17, 18, all these years it took to finally make its bottoms and complete this cycle. But take a look at Bitcoin. Boom. Okay, now let's go back here. Okay? And we see that almost exactly the same pattern here, and it's making these bottoms. Here it made a first bottom. It come along here, and it's made a second bottom, right? But look at this. It's done all of this. The same pattern we've seen it took how many years for silver to make. This thing hasn't even taken a year. It's doing the same pattern, but it's doing it much more compressed. It's doing it much faster. It's doing it 50 times faster. It's doing the same thing that silver did. It's following that same exact pattern silver's followed, except 50 times faster than silver. So silver's like a car going down the highway at 5 miles an hour, and Bitcoin is a Lamborghini passing silver. So when they both go into a bull market again, they probably, very possibly, could both go into a bull market simultaneously, because Bitcoin is on its way, doing the same pattern again, heading toward another bull market. Just like silver is. Silver's heading toward another bull market too. But they're both at different speeds. The frequency of the pattern that they're creating on the charts, they're both going through this process. This is a process in markets. But you can see now, now that you've studied this, you can see that the Dow Jones is going through this process too. But from here, it should have fell off, and it didn't. It's being artificially held up. The Dow Jones is. But we're seeing this tremendous drop off in its volumes just recently, and that doesn't bode well. This bodes that they might be losing control, and it might be going to drop anyway, even though that they've been controlling it. It might be getting ready for a massive drop. Could be. I mean, this is the signal I'm kind of getting. Is this is a very these weak volumes, and then a rising market on weak volumes. It doesn't look good. Now let's take a look here at crude oil. We've seen a fall off in crude oil. It was up into the 70s. Now it's down 69.26. $1.75 today alone, down 2.46%. Bonds and rates. Look at this. They got on this chart here. It says business inventories rise. Sales gain the biggest in 8 months. Business inventories rise. Well, business inventory rise just could mean that they're stocking up on merchandise. It might not be the biggest sales in 8 months. This is, of course, they're always trumpeting any little bit of good news they get. They trumpet it. Let's take a look at this bond market today. We're seeing rising yields all the way across the board today, and this is the first time in a while now we've seen any substantial rising yields, anything that's had any amount of size to it. I think that this is part of the suppression. I think I'm very suspicious of this market now at this point. I'm not going to come out and conclusively say that the Fed is buying their own bonds or whatever, but I'm very suspicious of them at this point. It could be that there's a tremendous inflow of buyers into these bonds of excess liquidity, but believe me, the way the Fed is sucking liquidity out of the system, this won't last much longer if that's what it is, and we're going to see everything turn over, and we're going to see these yields raise massively at some point. These bond yields, we're talking about them going up. The U.S. 10-year going up over 3.25%. and it could be like a springing action when that happens. Let's see. Well, let's take a look at the dollar today. U.S. dollar, 94.44. So it's up 0.29%. A little now down 2.9%. So it was riding at 95. You know, it's just down a little bit. What's the effect on silver price? Silver price should actually be going up a little bit with the dollar down. We're not seeing the silver price go much of anywhere today. Silver is I think is total despair for the market. I'm going to tell you what, guys, really, honestly, when you get a market that's in total despair like silver is right now, that's the time you should be buying with both fists. Seriously. This is a market that's getting ready to go back into a bull market again. And I think we're in the process of making the final bottom. I think the final bottom's getting ready to be put in. It could be somewhere around $14.50. But listen, don't plan on getting any of that $14.50 silver, because it's going to, if that bottom will be something that's probably made in the middle of the night, and it'll be with a spike that goes down to $14.50. It'll only last for an hour, sort of thing. And only the rich people can get in on stuff like that. They have to have a specialized bot or something to buy. They have to be. You're not going to get any of that action at your local coin dealer, because it's probably going to be in the middle of the night when the coin dealer's closed. You'd have to be able to buy it within a 5-minute period, and you know it's impossible. So you know, and it spikes down to like $14.50, and it comes right back up to $15.25 or whatever, you know, and it's only like for 5 minutes or whatever. Well, listen, anyway, thank you guys for listening to this market report, and we will catch you again very soon. Bye bye for now.